let's take things now to the east of the continent where Egildo Massuanganhe is new business development and sales research at Barclays Bank Mozambique, and he's joining us with our regular update on what's playing out in the Mozambican economy at large. Thanks so much, Egildo, for joining us this morning. Let's get straight into things at this stage of the game. What's your view on the direction of the Mozambican economy? We've gone through the first 2 months of this year.
Good morning, and thank you very much for having me on the line. Yes, last time we discussed it, we had a good prospectus on the Mozambican. We still maintain that view. If you look at the data just published on the 2012 third quarter, Mozambican grew by almost 7%, although 1.5 basis points lower than previous quarter. On the back of the slight slowdown on the secondary sector, in particular electricity, water, which is at minus 9%, hotels and restaurants minus 2%. However, despite this slowdown, we see the primary sector where the driver is still the mining sector. For example, mining sector grew by 42%, agriculture 9.4%, fishing 7.8%. So we hold the view that Mozambican economy is more likely to continue to enjoy this momentum, although we know that the recent floods have affected the Mozambican, but so far we don't have any data on how the floods will impact on the growth projection. Mm-hmm. But we have cases of the big names like Vale and Rio Tinto, who had to hold their exports because of the problems on the railroad from Tete to Beira. So, but we still maintain the view that Mozambique is going to reach what is expected, 8.4% for 2018.
In the face of what potential inflation risk, Egildo?
The recent figures by the E&E suggest that general figures has come up to 1.4% on the back of the concerning that costs due to the floods have impacted on inflation. Again, there's a pressure on the foods items and non-alcoholic beverage. The risks are there, and I think that is not a case for panics as we speak, because we are now talking about 1.4 against a target of 6.5, which provides enough room for the local authorities to implement measures to ensure that inflation is under control.